Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh, and greetings of peace to all viewers. Welcome to the second episode entitled Risk and Uncertainty. My name is Tamizi and I'll be your tutor for this episode. In trying to understand the difference between insurance and Takaful, we have to bear in mind that there are also many practices that are similar to both insurance and Takaful. So we need to really understand where is the difference. Okay, as mentioned in episode 1, we need to build on this step by step. In this episode, we will discuss why risk exists, the problem, how to manage this risk, the solutions available. In particular, we'll discuss the risk transfer mechanism that is used by insurance companies to offer a solution to the problem of risk. And then we'll discuss that in the context of insurance, risk is limited to uncertainty of financial loss. We are talking about money only. Understanding the various ways to manage risk, in particular risk transfer mechanism, is key to understanding the insurance business. Remember, we need to understand insurance business, the nature of the insurance business, so that for us to understand Takaful. This will help viewers to be able to ultimately do an informed comparison between insurance and Takaful. Note that most of the techniques shared in this episode 2 are also used by Takaful companies to a certain extent. The difference will be discussed in episode 6 onwards. Remember this? Episode 6, we're going to talk about the concept Takaful. Okay, before this, we have to go through the steps first, and then only we come to the concept, and the practice, and the laws, and then the models, and then the benefits. Okay. May Allah bless you for your effort to seek knowledge on Takaful. Do share the videos with your family and friends. There's no copyright. These are the 4 topics that we're going to discuss. We'll start with number 1, why do risk exist? Remember, we want to look at risk as the problem faced by all human beings, irrespective of whether they are Muslims or non-Muslims. Why do risks exist in the lives of human beings? Risks exist because human beings do not know for certain what is going to happen in the future. The future, it may not necessarily mean the long future. It could be just the next hour or the next minute. The tragic downing of the MH17 Malaysia Airlines, where 295 people died, is an example of not knowing that what is going to happen in the future. Can you imagine the passengers as they were boarding, as they were on board, having their meal, listening to music, watching the videos? They didn't know that in the next minute or the next hour, the plane will be shot down. This is what risk is all about. There is no risk if humans know the future for certain, but we don't. We can speculate, we can forecast, but we cannot know the future for certain. If we know, then no passengers will take the MH17 while boarding. They will just change flight. They say, hey, this flight is going to get shot down. We want to change flight. No, that's why risk exists, because we humans do not know what is going to happen in the future, and this future can be just the next minute. Let's take examples of some basic human problems. There are many, but let's take. The main one is don't know when to die. This is the problem for the young. They could die too soon. What's the problem? If you die too soon, who's going to take care of your family? Who's going to bring up your young children? I'm sure we have had experience where we went to visit a funeral of a friend who died at a young age, and the question will always be, do they have insurance? Who's going to take care of the wife who's not working? All that. So this is a problem. You don't know when you're going to die. And many of the passengers of MH17 were very young. Very young. They had a long way to go. So this is a problem of risk. The old also have a problem. They could live too long. Why is that a problem? For the old, for example, in Malaysia, retirement age 60, or they could increase it to 62. But the life expectancy is 75, meaning that if you retire at 60, you have 15 years to go. Who's going to give you the money to survive for the next 15 years? And don't forget inflation. Cost of living will go up, and your savings is just so much. So these are just examples of some problems. Of course, I'm not going to go through all these because there are others with good videos on this. Okay, I'm here to talk about risk. So, risk is the problem. Are there any solutions available for people when faced with risk? This is the second topic. What solutions are available for mankind to manage this problem called risk? Okay, you cannot eliminate risk. It will always be there because we humans beings, we don't know the future. It cannot be eliminated unless we know, but we don't know. So you can only manage it. There are 4 basic techniques: risk avoidance, risk reduction, risk retention, and all that. Okay, I'll go through the solutions very briefly because this is not a risk management course. You can go for other courses. This is just to illustrate to you that as a human being, both Muslims and non-Muslims, no one is exempted. We are faced with uncertainty of the future. Okay? So what can you do? You can avoid the risk. People who are fear of flying, they could avoid taking the plane. But this is not a good solution, not always the best, not always available, not always practical, but it is one solution that you can available to the human race. Or you can do a risk reduction, or you can do a risk retention, or risk transfer. Okay, of all these 4, okay, you can go through other topics. The details are outside the scope of this video. The one that we want to focus on is risk transfer. We'll talk about this in a moment. Okay, so the question that we need to ponder at this moment, at this juncture: can Muslims practice risk management? Okay, that's the question. Okay, I have here passages from the Quran. Verily, never will Allah change the fate of a people until they change it themselves. Another verse from Al-Baqarah 195: do not throw yourself into destruction. And I think I've read this before. O Lord, grant us good in this world and hereafter. In a sunnah, the Holy Prophet was reported to have told a Bedouin who left his camel untied to the will of Allah. So the Prophet saw him just leaving his camel untied. The Prophet asked him, why do you leave it untied? He says, I leave it to the fate. The Prophet said, tie your camel and then leave it to the will of Allah. In another narration, in a hadith narrated by Sa'ad bin Abi Waqqas, this is quoted in Sahih al-Bukhari. It is better for you to leave your offspring wealthy than to leave them poor, asking others for help. Okay, so what does this show? This show that Muslims need to go and do risk management. That is the question. So okay, if this is indeed allowed by Islam, let's take a look at some examples. Risk avoidance. We remember there is Muslims are forbidden to enter an area that is affected with cholera. You're not supposed to enter it. This is an example of risk avoidance. Risk reduction. There's a narration that's from the Prophet where Prophet is reported to have worn an armor to go to war. This is an example of risk reduction. Risk retention. Well, they take the risk. Tawakkul. Okay? But as we mentioned just now, first you do risk management, then you tawakkul. Okay? And the one that we need to talk to is risk transfer, where in Islam you can transfer if somebody is willing to take over your debts. In example, somebody can take over your debt and guarantee that he will pay your debts on your behalf. So this is an example of risk transfer. So all these are permissible in Islam. You have to do something about risk. Okay? Now the question to ponder, one more time, we go back to if yes, can Muslim, then the next question to ponder is, which of the four techniques to manage risk can Muslim practice? They can practice all four. Okay? So which one is insurance? Okay? We'll look at it later. Risk transfer is insurance, and in principle this can be done. Then what's wrong with insurance? That is for us to discuss in the next episode. Not the next episodes. Okay? So you have to be a little bit patient first. We need to understand what is risk, and then what is insurance, and then only we'll see what's wrong with insurance. Okay. But risk is a broad term. Any form of uncertainty is risk. Insurance cannot cover all forms of risk. Okay? That's another knowledge that's outside the scope of this video. Okay? But just for our purpose today, in terms of insurance, in the context of insurance, we call it uncertainty of financial loss. So in insurance, this uncertainty is about money only, loss of finances. Okay? Let's take a simple example of a new car owner. He just bought a car. Okay? What can he do? One, he could avoid the risk. Don't buy the car. Then he will not have any problem. What else? Okay? He could do risk reduction. Drive carefully, put on seat belt, put alarm for his car, and all that. But still, that will not guarantee that he will not have a financial loss due to accident. Or he could take a risk retention. Take the risk. Why not? If there's loss, I'll pay it myself. But not everybody can afford to do this. And the one that we want to talk about later is the risk transfer. And that is, one of it is insurance. Okay? Alright, so let's take a look at this. What are the risks of financial loss to this new car owner? could lose 50 ringgit. For example, he just bought his car, okay, and somebody scratched his car. He will suffer a bit of financial loss to polish his car back to normal. Or can he afford to lose this 50 ringgit? Yes, it's a small amount. Okay, 50 ringgit is like what, 10 US dollars. So this is not a problem. Remember, risk is the problem that we are talking about. Could he have a loss of 500 ringgit or $100 by using his car? Yes, it could happen. He's driving his car nicely and a pebble flew and smashed his windscreen. He has to replace his windscreen. It costs 500 ringgit. Well, this is not so big, but to some people, this could be a problem. 500 or 100 US dollars, roughly. Okay, what else? Could it be 5,000 ringgit or 1,000 US dollars, roughly? He has an accident, not a very big accident. He bumped into a tree, and to repair it costs 500 ringgit or 1,000 US dollars. Can you afford it? Well, it depends on how much you have in your savings. Okay, so these are examples that of problems from the insurance perspective. Could you have a loss of 50,000? Yes, you could have if your car is stolen. This is quite rampant. I show you a risk of car theft in Malaysia. Okay, this model 353 in a year was stolen in the year 2020. That's almost like one car a day. Another Proton 270. So the total is a few cars a day. So it can happen to anybody, right? And this is a lot of money. If you owe the bank 50,000 ringgit or 10,000 US dollars, and you still have got 5 years to pay on your high purchase, this could be a big problem. Could you lose 500,000 driving a 50,000 ringgit car? Yes, you could have, because you could bang into others. Take a look at this. This is an old case, of course, 2009 in Kota Baru. This was the car that was parked here. Instead of reversing, she drove through the wall, landed on the escalator, and caused massive damages to the car, to the escalator, to the building of the mall, and killed 2 people on the way. So the compensation that this person, car owner, had to pay could come up to 500,000 easily. So who's going to pay for this? This is a risk that insurance can cover as well. How about this? 5 million or 1 million US dollars. Could this happen? Yes, and this has happened to one car owner, unfortunate car owner, and he knocked into a motorcyclist who could not walk anymore and was taken to court, and the court awarded 5 million ringgit or $1 million to pay to the injured. Who's going to pay for this? Insurance. Okay, so you see, in insurance we are talking about financial loss, and this is the uncertainty. We don't know that it's going to happen. Most people can drive for years and years and they have no loss, so they don't see why they need to have an insurance. Okay, so the problem is very few people will have losses like this. This you can afford, this maybe you can afford, but the others, not everybody can afford. But most people have no loss, so they feel that they have no problem. Okay, so Which would you choose? Avoid, don't buy the car, drive carefully, take the risk. You can, if you are a multi-billionaire, you can afford to self-insure. And the one that we want to focus on in this video is the risk transfer. Okay? The problem is, how much do you budget? Do you budget? You can't put aside 5 million. You can't put aside 500,000. How much do you budget? But you can put a budget on a fixed cost. That is the premium. And this is what is the service provided by insurance, the risk management mechanism. Okay? What do you mean by risk management? Okay? Again, let's take the example of the car owner. Okay? Let's take the example of car owner. In Malaysia, in the city where I live, if you go for parking, just to give you an example of uncertainty, okay, where I live, you have to pay for parking, okay, by the hour. If you don't pay, and if the authorities catch you not paying, you'll be fined. Okay, can you imagine if you park your car and you take the risk, say, no, I'm not going to pay, and while you're doing your meeting, you'll be worried, will the authorities come and give you a ticket? And you will feel very uncomfortable. There's no peace of mind. As you do your work, you're worried about your car whose parking you have not paid. Okay? But if you were to pay the parking, maybe it costs 1 ringgit or 20 US cents for an hour, peace of mind. See, instead of having the stress of not paying, you took the risk. Why don't you just pay a fixed amount of 1 ringgit for the hour and no more worries? You can have your meetings. So insurance is like that. Okay? The beauty of insurance is that, okay, you pay a fixed premium. Okay? If we go back to the problem just now, instead of having all this problem, the insurance company say, okay, we can insure your car for a premium of, let's say, 2,000 ringgit a year. 2,000 ringgit a year is like what? 2,000 ringgit a year is like $400. By paying $400, that's it. You have no more problem. If it's 5,000, insurance will pay. 50,000, insurance will pay. 500,000, insurance will pay. 5 million. In fact, in Malaysia, the coverage for bodily injury to third party is unlimited. So, this is what insurance is all about. It's a solution that transfers you from a problem of uncertainty. You don't know how much your loss is going to be like this. You don't know. And for a fixed premium, you pay 2,000 ringgit a year for your car insurance, or $400 for a year. That's it. That $400 or the 2,000 ringgit, you can put it in your budget as you budget for your petrol, for your maintenance, for your insurance. You put it in your budget, that's it. Okay? So I hope now you can see that out of the 4 solutions available, you can do risk avoidance, don't buy the car, drive carefully, risk reduction, take the risk. Maybe if you are a multi-billionaire, you can do that without insurance. Or the most effective way to manage your risk as a car owner, as an example, okay, is to take insurance risk transfer. Okay, bear in mind later on, Takaful provides the same service to a certain extent with some modification. Okay, so I hope the next question that you need to ponder is, how can the insurance company offer certainty for 2,000 ringgit fixed premium when they too don't know what's going to happen in the future? Well, we will discuss this in the next episode. Okay, I know I said at the beginning of this episode that risk is not knowing what's going to happen in the future, but with knowledge you can have you can do a fairly confident forecast of the future. Okay, in future, for example, okay, for those now we are in Ramadan. At the end of Ramadan there will be the Eid festival, and in Malaysia many of the people will go back to their hometown, and every year in year out there will be road accidents, and unfortunately during the happy days there will be fatal accidents, and every day it will be. So we could, for example, have some idea that although we don't know for certain, but we can know that there will be fatal accidents, and this is what we're going to discuss in the next episode. Okay, this is what we're going to discuss next episode. So you have to know what is it that insurance provide, which is the risk transfer, and we will discuss how do they do it, how are they able to confidently provide this risk transfer mechanism and fix the premium. The utility of insurance is when the premium is fixed. That means the insured, instead of having doubts, uncertain of his loss, 50 or 500 or 5,000 or 500,000 or 5 million, he just pay 2,000 fixed and his problem is solved. This is what risk transfer is all about. Okay, as I said, this tutorial is not about risk management, just to give you an idea. Eventually we want to know about Takaful. This is just to give you an idea what insurance does, so that after this we can then do a study what is wrong with insurance from Sharia perspective. That will come in episode 6. Okay, what did we learn? Let's recap. Okay, every human is burdened with the problem of risk, without exceptions, Muslims or non-Muslims. There are many ways to manage risk: risk avoidance, risk reduction, risk retention, risk transfer, and Muslims are also encouraged to do so as well. Risk in the context of insurance is limited to money. It's about financial losses only. We can't do non-financial losses. We cannot cover the hurt of losing a husband or the hurt of losing a father. These are not measurable. We can only insure what is measurable. We'll talk about this when we talk about insurance. Okay, risk transfer is the mechanism used by insurance companies to offer solutions of certainty. Okay, remember certainty? The fixed premium. That is the certainty in the form of a. Okay, so this is an idea. Now we will carry on to the next episode to know more about the insurance. How is it that they are able to provide the risk transfer mechanism and confidently charge you a fixed premium in advance, so that the clients will have a fixed premium to budget and no more worries. As an example. Okay, the same example can be used for other risks, like risk of premature death, risk of having medical issues, medical expenses, etc., etc. Okay, so we have now gone through 2 episodes already, and the next one will be about insurance, inshallah. It's called Insurance, a Misunderstood Business. Why I say this? Because a lot of people, even sometimes sadly, people who work in insurance, they misunderstand what we do as a business. Okay, I hope that in this short video you now have an example. Once we know this, then we can go and talk about the Sharia issues. Okay, all right. So we'll see you again in the next episode. By the way, I want everybody to know that we are going to have Bahasa Malaysia version of these videos as well. So inshallah, it will take a bit of time that every episode in English will have a Bahasa Malaysia version as well for those who prefer to listen to the talks in Bahasa Malaysia. Okay, and another thing I'd like to say that this picture of mine is about 20 years old, so it is not that I'm want to show you, as I said earlier, these slides that I show you are all old slides from when I was practicing. So as you could see just now, the newspaper report was 2020, 2009 and so on. Okay, so I've not changed the picture. I kept it just for nostalgia on my old picture. So inshallah, I'll see you again in the next episode. Wabillahi taufiq wal hidayah. Assalamualaikum warahmatullahi wabarakatuh. Peace to all.